Well, there's plenty to unpack about the economy and especially around some of those inflation forecasts, plus, of course, government intervention in the energy markets that threatens to derail investment in key projects. Stephen Walters is the Business Council of Australia's chief economist and joins me now from our Canberra studios. Stephen, the one thing that Australia can ill afford right now is a lack of investment in key business infrastructure, surely.
You're right, Ross. When you look at investment as a share of GDP, it's actually at the lowest level in 3 decades. So that was before we saw this new approach to perhaps some people think is threatening some of the investment outlook for Australia. So it's not like we're in the midst of an investment boom that we're all enjoying here and there's all this great innovation going on and a new infrastructure and new capacity being put in. In fact, it's the lowest in 30 years since the last recession or the last deep recession in the early 1990s. So we have to be careful here. Business is already a bit reluctant to be risking their capital over the long term. And remember, that's the nature of investment, right? It's not like a very near-term return on this investment. Often it's over multi-years, even decades. So we need to be mindful of the environment for investment. And of course, interest rates are going up. That's not the main constraint on investment, as we know. Our members are always telling us the cost of capital is not the main constraint on their investment. It's things like policy certainty and the long-term returns they're going to get on that investment.
So this is one of the things, and you even heard it as we played earlier on, Caltex today in the Senate estimates indicated that because of a change of policy on clean fuels, but also high inflation, that's the key there, the high inflation, that they're considering investments of many hundreds of millions of dollars to upgrade plants. But of course, they've got to look at all of those things in the mix. Why is inflation so important to that? And why is it important the Reserve Bank and the government make certain that this inflation does not remain really out of control?
Oh, look, I'll start with the last part of that, Ross. So, look, inflation's the real scourge, and I think Phil Lowe, the Reserve Bank governor, said it late last year that it's the real scourge, and I think the Treasurer's even said the same thing in some of his public comments. So we know inflation's very damaging. It really distorts the economy. It rewards certain types of investment, particularly unproductive assets. So, and of course, the Reserve Bank's doing what they should do when we've got a highest inflation rate since the early 1990s. They're putting up interest rates. Now, all of that adds to uncertainty. I won't talk specifically about the Caltex example, but there are certainly a lot of businesses out there that are competing in a global market for capital. Capital can very easily move across borders, and already we've got a pretty uncompetitive tax regime for corporates. We know that. Our budget submission this week outlined things we can do about that. But inflation really just adds to that extra layer of uncertainty. And let's not forget there's a war going on in the Ukraine. So it's pretty hard to say inflation's peaked. Like the Treasurer, I hope it has. I'm just not as convinced as he sounds that perhaps it's peaked here. So look, it's running at nearly 8%. Now, the last time we had inflation at 8% was after the recession in the early 1990s. So this is not a little blip in inflation. It's a pretty serious, what seems like a pretty structural change in pricing, and therefore interest rates are going to keep going up for some time, including next week.
OK, so then the government surely also has a role in controlling inflation. It's about controlling its own spending, and yet we don't have any limits right now on the amount that the government can spend as a percentage of GDP in the budget. Is that really an error that the government needs to fix?
I wouldn't call it an error. I'd call it a risk, Ross. We know that last year the government's budget in October saw the expenditure share of GDP drifting up to about 27% of the economy. Now, typically this is closer to 25% of GDP. So I think it's the Treasurer needs to be very careful that he doesn't pour what we'd call fiscal stimulus into the economy at the exact same time the Reserve Bank's just delivered the most aggressive interest rate hikes in a generation. You do not want to have those two main arms of policy pulling in opposite directions. So the risk here would be that, yes, the government perhaps gives some more cost of living relief in the budget coming in May. The Treasurer said that's going to be one of the centrepieces of his budget. That can be done. You can help vulnerable Australians and those that are really struggling with their energy bills particularly, but you don't want to be spraying too much of this government's fiscal firepower around the economy that's already at its full capacity. We know we've got the lowest unemployment rate since Gough Whitlam was Prime Minister. That's 50 years ago. You don't want to be sprinkling too much money across an economy that's at capacity because it'll make the inflation problem worse. And therefore, as we just discussed, the Reserve Bank will start lifting interest rates even more aggressively. And that'll hurt the very people you're trying to help with these cost of living programs.
Stephen Bolters, Chief Economist at the Business Council of Australia. Many thanks for your time today.
My pleasure, Ross.